What is the euro doing at this level? The fact that it's here is not terribly remarkable, but why is it still here? Let me put it another way. It is not enough. Currency markets and markets in general, but specifically currency markets, because that's what I'm talking about, operate on what I call scenarios, a particular view of the world. When I first started trading 25 years ago, matter of fact, I was supposed to have drinks with one of my old trader colleagues from 20 years ago today, but he has to do something, so we canceled. But when I first went to the desk, I didn't have a clue as to what was going on in currency markets. I showed up in my tweed jacket, an English major with a graduate degree in finance. I had no idea what was going on, none whatsoever. I used to sit there and do the New York Times crossword puzzle, and they looked at me like I was from another world, which primarily I was. But one of the things that people said to me, traders are not particularly talkative, nor are they particularly insightful, at least verbally, as far as their profession. Trading at that time in that way was very instinctual, far more than any analysis the way we perform now. But they said you have to have a view. I don't know what they meant. But this is exactly what they meant. This is exactly what's going on now. The view is the bias. It's the general tilt towards the market, towards a currency in general, towards what you think is going to happen. So when you look, when you're sitting at a trading desk in those days and trying to decide whether to be long or short or what to do in some instantaneous section, 2 seconds, 3 seconds when someone's giving you a position, your view makes the balance on your decision. Most of the time in that market, you would have covered the position. Your job, as I worked for Credit Suisse, was a liquidity maker. Your job is to provide liquidity to the customers and to the market, get out of the positions and make money. Most of the time, you simply covered the position. If you could, flat, better yet, at a point or two profit, a point loss if you have to, but you get out of the position. You don't sit there and wait for it to turn into a profit. Recipe for disaster. Recipe for losses. But one of the things which might help you make the decision is your view. So if someone just gave you, say we were trading euro, which didn't exist in those days. Of course, we were trading the Deutschmark. But say someone gave you 20 million euro, $20 million mark, as it was called in those days, the dollar against the mark. You were long the dollar and short the marks. Somebody else sold the dollar, you bought it. That's what the currency markets did. That's what traders did. So should you sell this or not? You're not getting a lot of information out of the market. In other words, market's been trading fairly level for the past half hour. So you don't have a lot of indication from the market itself about what to do. But if your view in general is that the dollar is probably going to strengthen based on something, it could be because the Fed is in a rate hike cycle. It could be because we have bounced off the bottom 3 times in the dollar against the market, and it's more likely to go up having tested the bottom. You're more likely to hold that position for a minute or 2 minutes or 3 minutes, probably not much longer, to see if the dollar goes up against the market, at which point you'll sell it at a profit. So that view informs your decision. In a similar fashion, the view now on the euro has been stronger, primarily due, I have felt, to quantitative easing. Whether or not it actually has a lot of effect is irrelevant. When there is a decision to be made, the bias has been, at least since July, as you can see on this chart, for the euro to get stronger. This scenario does not have to be based in economic reality. And sometimes when you are seeing this picture as traders, even if it's completely at odds, as I'm going to demonstrate, I hope that it is, with economic and rate reality, it is not enough that everyone knows this. And everyone can sit there and ask the same question. What is the euro doing at these levels? It takes more than economic analysis. It generally takes a triggering event to make the markets realize, and the trigger event can be of many different types. It can even be technical. The market could go through a certain level, and that would convince everyone that the reality has changed. But until that trigger strikes them, it could be news. Until that trigger strikes the market, the irrational aspect of the market, at least compared to economic analysis, will remain in place. So, let's take a look at some of the traditional comparisons. Now, the comparison we've been making for 5 years, basically, or the situation in the currency markets for the past 5 years, has been, and as everyone knows from who attends my webinars, anyone who would like to pose a question, a comment, criticism, just type it into the chat box, and I'll be glad to stop and consider the comment, talk about it. I prefer this to be as a colloquium rather than as a lecture. So please participate to any degree you find interesting, or comment on anything that you find interesting. For the past 5 years, we have been sort of in a state of suspended animation when it comes to the traditional types of analysis that markets do and have done, currency markets, comparing currencies. Generally, that's an economic analysis which shades over or informs central bank rate policy. That's the traditional standard way of looking at it. The view that I was speaking about earlier could easily be one informed by differing rate policies of central banks. If the ECB or the Bundesbank is on hold in general, but the Fed is raising rates or has raised rates in its last meeting or in its last move, then unless something has changed, you have a bias towards the dollar. That's what I was speaking about earlier, is if you had a scenario. But for the past 5 years, because of the extraordinary interventions in the market, primarily by the Federal Reserve, but by other banks as well, the rate policy has not been informed, at least not to the same degree, by economic reality. The European economies have been in terrible shape, especially since the Greeks discovered that they owed a lot more money than they thought.